2012 situation that I talked about before is now back on the table when it comes to silver and gold now. The shape is extremely similar to what we had back in this area, with a big movement down starting with an August to September top. The same kind of structural path is similar here. Kind of a little hit right on the 55-week lowest close, little hit 55-week lowest close. We did not get the September rally here into the September FOMC. That did not happen for 2012. That was what this whole rally was supposed to do at the worst case scenario. And that where we're at right now, this correction beneath the 50-week moving average that I'm not showing here. Let me pull that up really fast. The 50-week moving average for previous big rallies, the thick white line here, has usually held previous gold rallies for a while. So if you go back to like 2000 and you look at maybe 2000 to 2008, where you had a big sell-off, the 50-week moving average pretty much held this thing the entire way. Moved down through, but then recaptured it, and then moved up for another 2 or 3 years before finally losing it and trending sideways. So same thing here. This only happened for maybe 1 or 2 years for this rally before losing it, then trending sideways. So if we start moving down to maybe the 1700 level or so again, it's not looking good for gold. And if I pull up another chart here that I have that I look at sometimes, and I talked about this before in a previous video, that we are very, very similar in circumstances to what happened in 2012. And I've gone over this a couple of times. So let me take off a bunch of things here. Take off TLT, take off the 10-2 yield spread, and just look at gold and tips in the 2-year really quick. So back in 2012, right where the top was, we had this big long consolidation that lasted maybe a year and a half, with the 2-year down at crisis level lows here. Tips in white kept going up higher. Gold kept going down, but the moves were matched in direction for tips, just not the same type of magnitude for gold. Same thing we're getting here. Tips are moving up. Gold is moving up in sympathy and down in greater sympathy with tips. Big movements down in tips, big moves down in gold. Movements up in tips, tiny move ups in gold. Very different from 2018 to 2020, where the magnitude of the tips movements, as far as, the power and making new highs in a trend, were matched by gold doing the same. Not so much anymore. Tips is at near all-time highs and keeps going up. Tips was at near all-time highs and keeps going up in the white in the background. Gold is not matching that in sympathy. And the same thing this is 10-year real yields inverted to match the direction, because gold is negatively correlated to real yields. So to make them look at the same, I invert it as far as the scale. So the higher up that the red goes, the more negative 10-year real yields are going. So same kind of story here. 10-year real yields still making new highs in the trend. Gold not matching the new highs. 10-year real yields made a new high compared to August of last year, not matched by gold. And the same kind of situation here for what we're dealing with the 2-year yields. 2-year yield is at this crisis level low down here, all the way down at 0.2 to 0.3% for the yield. Same position that it's at here. The upside for gold, I think, is capped, because, and I saw some people, very rarely do I see any kind of output as far as newsletters or anything that's discussing this. And I think that it's a very real problem, that real yields are so low right now and so negative, just like they were back here, that there's really little upside to gold at this point. And the 2-year yield where it is right now, it can't really go any lower unless it goes negative. And this is just the nominal yield. It's not the real 2-year yield or anything. So I think that it's possible that this has to go back up, the 2-year yield in purple, before, and gold has to actually come down before there can be another big rally. That's kind of the camp that I'm in right now, because I don't think that gold is behaving properly with silver and with bond yields and with everything that's going on. Inflation is rampant and gold is not performing here, because I think that it is capped by the yields to go higher. And silver, because it likes to move with gold, is doing similar things here. Tapering will undoubtedly raise the dollar, and bond yields will go up. Which is kind of counterintuitive there, because I don't know if it might be a limited upside to the dollar because bond yields go